Assalamu alaikum, dear student. Let's start another lecture on taxation. In this lecture, dear student, we'll be discussing a few concepts like jointly owned assets, marriage allowance, and income of a child. So these are the three things which we will be discussing. Let's see. Don't worry about this. Test your understanding right now. We will come to this inshallah. But let me first discuss few concepts. There's one concept which is called jointly owned asset. Jointly owned asset. Obviously, we are talking about husband and wife, or you can say civil partners. If there is any jointly owned asset and actual ownership is not declared jointly by husband and wife in HMRC, then whatever income comes from that jointly owned asset, that income will be split into 50-50%. Repeat. If there is any jointly controlled asset by husband and wife and actual ownership is not declared jointly in HMRC, then whatever income comes from that jointly owned asset, it will be split between husband and wife 50-50%. For example, let's talk about a jointly owned property from where you are generating rental income. Since it is a jointly owned property, rental income is coming and actual ownership has not been, you people have not made any election for the actual ownership in HMRC. In that case, whatever rent income is coming, it will be split between husband and wife 50-50%. So that is the simple concept of jointly owned property. Obviously, if they make the election and declare the actual ownership of the jointly owned asset, then income will be split according to their actual ownership. But whenever nothing is mentioned, they are not making an election for the actual ownership, then whatever income comes, it will be split 50-50% between husband and wife. Okay, second concept or second rule is marriage allowance. Of course, for marriage allowance, marriage is necessary. What is this marriage allowance? Number one, the marriage allowance is fixed 1260. The marriage allowance is fixed 1260. It cannot be less than that. It cannot be more than that. Obviously, you might be thinking, sir, actually, what is a marriage allowance? And you are just saying marriage allowance is 1260 fixed. What it is? Let me explain. Obviously, in order to get the marriage allowance, the marriage is compulsory. Next, what it is, I'm coming to that. Actually, what marriage allowance does, actually, if from husband and wife, one of them is in a position that has income so less that could not use the entire personal allowance, then that partner should transfer 1260 of his or her personal allowance to the another partner who can use the personal allowance of his or her own as well as this 1260. So claiming marriage allowance means you are just transferring the personal allowance of 1260 to another partner. How it works, we'll come to that. But let me tell you the condition. This marriage allowance is only available when husband and wife both are basic rate taxpayer. Repeat, marriage allowance is only available. Marriage allowance is only available when husband and wife both are basic rate taxpayer. Both are basic rate taxpayer. Basic rate taxpayer. Marriage allowance is only available when husband and wife both are basic, both, okay? Both are basic rate taxpayer. And marriage allowance is fixed 1260. Marriage allowance is fixed 1260. Actually, if one spouse has income so less that that particular spouse cannot utilize his or her entire personal allowance, then what it does, it transfers 1260 of his or her personal allowance to another partner who can use his own personal allowance as well as this 1260. But the marriage allowance is fixed 1260. Okay, next point. Actually, how this marriage allowance works. Due to this marriage allowance, actually, recipient spouse personal allowance will not increase. If recipient spouse personal allowance is not increasing due to 1260, then the question remains same how it works. Now let me explain this, how this marriage allowance works. Assuming we have husband and wife, name could be, let's put any name. Assuming we have X and Y, husband and wife. X and Y. Assuming X is the husband, Y is the wife. Okay. Let me take employment income. Employment income. Assuming X is having employment income of 36,000. Y is having employment income of 8,000. Obviously, it can be seen in the question. Y, who's the wife of X, has income so less that Y cannot use her personal allowance completely. So definitely Y should transfer 1260 to X. Okay, how it works? Look at this. Personal allowance. X is having a personal allowance of 12570. Obviously, Y can only use 8,000 of her personal allowance. From 36,000, when I deduct 12570, I'm getting a taxable income of 23,430, and it can be seen that entire taxable income 23,430 falls in basic rate band. Entire 23,430 actually falls in basic rate band. Okay. And they are making marriage allowance election. We need to calculate income tax liability for X. Obviously, entire 23,430 falls in basic rate band, belongs to non-saving income where applicable tax rate is 20%. Basic rate band, non-saving, 23,430 into, of course, 20%. Let's see what I'm getting. I'm getting 4,686. As I mentioned, they are claiming marriage allowance. In marriage allowance, what happens? Let's say in marriage allowance, Y has transferred 1260 of her personal allowance to X. It can be seen here. We did not increase the personal allowance of recipient partner. So the question is, if we are not increasing the personal allowance of recipient partner, then how it works? It's very simple. Simply deduct marriage allowance relief. Marriage allowance relief. You have to take 1260 into 20%. That is fixed, okay? Actually, marriage allowance relief reduces your income tax liability and it is fixed 252. If you multiply 20% with 1260, you will get 252. So instead of increasing the personal allowance of recipient partner by 1260, what do? We simply calculate income tax liability of a recipient partner, and then from that income tax liability we deduct the marriage allowance relief, which is fixed 1260 into 20%. Let me repeat, marriage allowance relief is fixed 1260 into 20%. It cannot be less than 1260, it cannot be more than 1260, and it is always 252 whenever it is being claimed. So 4686 minus 252. 4686 minus 252. Dear student, I'm getting income tax liability 4434. I'm getting income tax liability. Income tax liability 4434. So marriage allowance is fixed, which is 1260. In marriage allowance, the relief is 1260 into 20%. And all these rules are fixed, means fixed. These rules don't change. Okay. Another very important concept relating to marriage allowance election, but this is only for those students that are actually planning for really good marks. That is when this marriage allowance election is effective. So let me explain, write the rule. To be effective for the tax year 2022-23, the election can be made. The election can be made either in advance or in arrears. In advance, there are two possibilities. Either you can go and make the election in advance, or you can make the election in arrears. In advance, the first point of advance is by 5th April 2023. By 5th April 2023. The second point is the election will remain in force for the future tax years. The election will remain in force for future tax years. Future tax years, unless the election is withdrawn. Unless the election is withdrawn, or the condition for the relief are no longer met. The conditions for relief are no longer met. The conditions for relief are no longer met. For example, one of them becomes a higher rate taxpayer, then obviously marriage allowance is not available. Or another possibility, if you're not making this election in advance, then you can make this election in arrears. If we make this election in arrears, let's see then what happens. By 5th April 2027, that is within 4 years, within 4 years of the end of tax year, of the end of the tax year, end of the tax year. Second, In this case, election will only apply to the tax year 22-23 because you are going for arrears. In this case, the election will only apply to the tax year 2022-23 in isolation. So dear student, if you get time, try to remember these rules. These rules will help you. If you are really planning for really good marks, then obviously you should know these dates and all this stuff. So we have so far discussed jointly owned asset concept. We did discuss marriage allowance. And now let's discuss income of a child. What is the concept of income of a child? Income of a child. The rule is gross 100 pound. What is this rule of gross 100 pound? Let me explain that. Number one, let us discuss what do you mean by child in UK. Actually, in order to be a child in UK, to be treated as a child in UK, two conditions must be met. The child is under 18 and unmarried. Both the conditions must be met, okay? The child has to be under 18 and has to be unmarried. Okay, now the question arises, if it means we are talking about a minor, you can say in another words minor, okay? The child is under 18 and unmarried. If the child is in that case, if someone is a child having age less than under 18 and unmarried, then the gross 100 pound income belongs to the child. Then the gross 100 pound income, which is given from the parent to the child, it will be treated as a child income. Okay. But if income is coming from the parent to a minor child or a child who is under 18 and unmarried, it's the same thing, okay? Child or minor child. If income is coming from parent to a child who is under 18 and unmarried and the income is more than 100 pound. If the income is more than 100 pound, then the entire income belongs to a parent who has given this gift to the child. Repeat. Assuming parent has given a gift to a child who is under 18 and unmarried, and that gift is actually generating the income, which is more than 100 pound. If that particular gift is generating an income which is more than 100 pound, then the entire income belongs to the parent who has given gift to a child. Not only the excess amount, actually the entire income amount belongs to a parent who has given this gift to a child. And this rule only applicable when the gift is coming from the parent to a child and that gift is generating income more than 100 pound. This rule does not apply to other relatives because normally other relatives, they don't give such gifts. So if the income is a gross 100 pound, then that belongs to a child. If income is more than that, then actually that income belongs to a parent who has given gift to the child. Now let us actually apply this income of a child rule in a question, and then let's see how it works. At the start of the lecture, there was one question. Let's see this. Question says calculate Kate's income tax liability for the tax year 22-23, representing Finance Act 2022. Okay. Kate has the following income: outgoings and allowances for the year ended 5th April 2023. She's married to Norman, but we are here to work for Kate's income tax liability. Okay. Salary is 41,550. Benefits assessable as employment income is 1875. Allowable expenses of employment is 95. Obviously, these allowable expenses will reduce the employment income. We have bank interest, that is saving income 2,650. Building society interest is like an interest from bank 2,115. Interest from ISA, individual saving account, is 500 and this is exempt. All you need is, dear student, just remember one point. If interest is coming from individual saving account, then it is exempt. And for individual saving account, examiner will have to use the name individual saving account. That's it. So when interest is coming from IASA, individual saving account, that interest is actually exempt. So interest from IASA is exempt, means you are not paying any tax on that. Norman and Kate have a son, Mets, age 10 years. Mets was given a 5,000 pound 3.5% gilts on 6 April 2022 as a birthday present by Kate. Wow. From where Mets has found such great parent? They have given gift of 5,000 pound gilts as gift to Mets. Now look at this. 3.5% means this 5,000 gilts of 3.5% generates interest income of 3.5%. If we take 3.5% of 5,000, if we take 3.5% of this 5,000, so we are getting 175. Since this 175 is more than 100 pounds, so entire 175 interest income actually belongs to the Kate, because Kate is the one who has given gift to her son. So entire 175 belongs to Kate. On 15 November 2022, Norman and Kate jointly bought a property that has been let out as unfurnished accommodation. The assessable property for the tax year 22-23 is 4,100. No declaration has been made in respect of this source of income. If you're not declaring your actual ownership, then what happens? The jointly controlled asset income will be split between husband and wife 50-50%. So obviously property income is a non-saving income. If I take 50% of this, I'm getting 2,050. So basically, Kate is having a property income of 2,050. As we just discussed at the start of, I believe, this lecture, if there is a jointly owned property between husband and wife, jointly owned asset between husband and wife, and actual ownership is not declared, then whatever income is coming, that will be split 50-50%. And we are here to calculate Kate's income tax liability. Okay. So simply, in case of Kate, there's a employment income, there's a property income, which is also non-saving, and we have interest income. There's no dividend income in this question. So we just need to calculate income tax liability. Let's see, do we have a space enough here or no? Yes, we have enough space. So I want to solve it here. Now let's try to solve here. We can calculate employment income in one go. Just a minute. Employment income is a non-saving income, and we do have saving income also. We do not have any dividend income. Total. Okay. Employment income. Employment income. Dear student, we are calculating income tax liability for Kate. Okay. She is having a salary of 41,550. Assessable benefit 1875. Allowable expenses 95. So let me use the calculator. 41,550 plus 1875 minus 95. So I'm getting non-saving income 43,330. Let me recalculate so that there shouldn't be any arithmetical error. Otherwise, you people will be asking so many questions on WhatsApp, then it becomes difficult to answer. So the non-saving income is 43,330. Okay, now let's go for the saving income. Let's go for the... Okay, we have property income also. Property income is a non-saving income. Property income is 4,100, but we have to take 50% of this because of jointly owned asset. 2050. Interest income from bank is a saving income. Interest income from bank. The amount of interest income from bank is 2,650. Interest from building society. Interest income from building society. That is 2,115. Income from ISA is exempt. Income from individual saving account is exempt, but you have to mention in your exam that it is exempt. So dear student, income from building society is 2,115. Interest from bank is 2,650. Interest from ISA individual saving account is exempt, which you have to mention. Now, since Kate has given a gift of £5,000 3.5% gilts, which generates the interest income of 175. Since this 175 income is more than £100, so the entire income belongs to the Kate. So interest income, interest income from 3.5% gilts. Simply if you take 3.5% of 5,000, it is 175. That is also the saving income, 175. That's it. No more incomes. Let us do the total to get total income. 43,330 plus 2050. Dear student, I'm getting total income. I'm getting the total income 45,380. I'm getting the total income 45,380. Now make the column total of saving income 2650 plus 2115 plus 175. I'm getting 4,940 plus 45380. So it is coming 50,320. Obviously the personal allowance will be deducted from the non-saving income 12570. 12570. Now we'll have taxable income. Taxable income. Taxable income. Let me use the calculator. 45,380 minus 12570. Dear student, the taxable income in non-saving column is 32,810. Over here it is 4940. 37,750. Now let's calculate the income tax liability for the Kate. We have almost completed the question, but not exactly 100%. We are calculating income tax. Of course, 32,810. The entire non-saving income falls in basic rate band. Basic rate band non-saving 32,810 into 20%. 32810 into 20%, it is coming 6,562. Okay, now dear student, listen and listen carefully. Now we have to tax the saving income. Number one, no starting rate band concept applies because the taxable income in the column of non-saving is more than £5,000. Whenever taxable income in the column of non-saving is either 5,000 or more than that, in that case, starting rate band concept does not apply for the saving income. Second, if individual is a basic rate taxpayer, gets nil rate band of £1,000 in saving income. If someone is a higher rate taxpayer, gets nil rate band for the £500. If someone is an additional rate taxpayer, does not get any nil rate band for saving income. How do we decide this individual is a basic, higher or additional rate taxpayer? Look at this. You have to see the tax total in the total taxable income. The total taxable income is 37,750 and basic rate band limit is 37,700. Since by looking at 37,750 we can easily say this amount is more than the limit of basic rate band. Since the total taxable income is more than the limit of basic rate band, so this individual is a higher rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of £500 for his or her saving income. So Cat is entitled to get the nil rate band for the saving income only £500. Because Kate is a higher rate taxpayer. How do we decide? How did I decide? By looking at 37,750, which is more than the basic rate band limit, which is 37,700. So always the tax paying status is decided on the basis of total taxable income in the column of total. So let's go for nil rate band. Nil rate band saving income. £500 into 0% is obviously 0. Now let's see how much space is left in basic rate band. Basic rate band saving income. Actually, the limit of basic rate band is 37,700 and out of that we have used 32810. We have also used 500. So how much space, how much limit is left in a basic rate band? 37,700 minus 3210 minus 500. We are left with 4,390. So the remaining limit is 4,390 in the basic rate band where the applicable tax rate is 20%. I'm getting 878. Okay, now listen and listen carefully. The saving income which we have to tax is 4950. Out of this 4950, 500 actually we have tax in nil rate band and the remaining 4390 in the basic rate band. Whatever is left that falls in a higher rate band, which is going to be definitely 50. 4940 minus the 500 minus 4390. So answer must be 50. Let's check. Yes, it is 50. How did I decide? Directly by looking at the total taxable income. The total taxable income is 37,750, which is just 50 more than the limit of the basic rate band. So definitely only 50 falls in higher rate band. Higher rate band, saving income is just falling 50 into 40%, which is 20. So let's here comes income tax liability of Kate. Income tax liability of Kate. 6562 plus 878 plus 20. I'm getting income tax liability 7,460. So income tax liability of Kate is 7,460. So dear student, in this lecture, we did discuss the concept of jointly owned asset, marriage allowance, and income of a minor child. And then after discussing these rules, we have alhamdulillah solved one complete question which covers all these rules. So in the next class, inshallah, I'll come with new rules altogether. So thank you very much for watching this lecture. Have a nice life.